Assalamualaikum. This is our group project for TAX667 presented by Group 9 AC2203D. My team consists of 4 members, which is the first one is me, Nur Afka binti Muhammad SAKRI. The second member is SYAMIMI NABILA binti ALIAS. The third member is Luqmanul Hakim binti ALIAS, and the third member, which is international student FAHRUL RAZI. We move to the next part, which is introduction. Tax audit is primary activity of the Island Revenue Board of Malaysia. It is aimed at enhancing voluntary compliance with the tax laws and regulation under Income Tax 1967. Hence, a taxpayer can be selected for an audit at any time. This framework, issued by IRBM to ensure that tax credit is carried out at true and fair view and thus no fraud and error occur. So what is tax audit? Tax audit is an examination of a taxpayer business records and financial affairs to ascertain that the right amount of income should be declared and the right amount of tax should be calculated and paid are in accordance with the tax laws and regulation. Tax audit consists two types of audit, which is the first one is desk audit and the second one is field audit. What is desk audit? A desk audit is held at the IRBM office. It is involve issues or adjustment of income and tax that can be resolved by correspondence. A taxpayer may be called for an interview at IRBM office if further information is required. So, a desk audit will check all the information on income, expenses as well as various types of claim made by a taxpayer in his income tax return so that no fraud and error occur. Furthermore, in circumstances, a desk audit case may be referred for a field audit action if more in-depth investigation or physical inspection is needed. So it will move to the field audit. Hence, the taxpayer will be informed through a field audit notification letter as part of the normal process of commencing the field audit. What is a field audit? A field audit is one that takes place at a taxpayer's premise. It involves the examination of the taxpayer business records. In this case, of a sole proprietorship or partnership, if the taxpayer's business records are incomplete, it may involve the examination of non-business records such as personal bank statement and etc. A taxpayer will be given notice prior to a field audit. Next part, we will move to the audit compliance. In field audit, we will examine three things, which is the first one is general compliance audit, the second one is issue-based audit, and the last one is special audit. In issue-based audit, we have 5 things to examine, which is the first one is expenses claim, the capital allowance, withholding tax, incentive, and other technical issue. And in special audit, we will examine transfer pricing, electronic trading, and international client audit. So we move to the next part, which is objective of tax audits. So what's the main objective? The main objective is to encourage voluntary compliance with the tax laws and regulation and to ensure that a higher tax compliance rate is achieved under the self-assessment system. Furthermore, it is to ensure that the correct amount of income has been reported and paid according to law and regulations. And the last one is to educate and create awareness of taxpayers towards their rights and possibility under the Income Tax Act 1967.
Assalamualaikum warahmatullahi wabarakatuh. My name is SYAMIMI binti ALIAS, and so for next I will be discussing about audit process. So audit process has 6 processes, which is the first one is audit venue. Audit venue for desk audit will be carried out at the IRBM's office, meanwhile for field audit, it is carried out at a taxpayer's business premise. If the business premise is not suitable, the taxpayer may discuss with IRBM to change the venue. The second step is audit commencement. Taxpayers will receive a letter asking for documents and information through email, fax, or mail. They have 14 days to provide the needed documents, and if they don't, the audit will continue using the appropriate method. For desk audits, taxpayers may not get a letter, but they will get informed of income and tax changes with the assessment notice. Meanwhile, for field audits, taxpayers will get a visit notification 14 days before. Taxpayers can ask to postpone with a good reason, and they can also contact the audit manager or branch director to confirm the visit. After that comes the visit, which only happens for field audits. The audit begins with an interview where officers meet the taxpayer, learn about their business, and discuss the audit. Taxpayers will explain their business activities, accounting, and record-keeping system, and the person handling the business records will also be interviewed during the audit. Next is the examination of records will be commenced. Following that, the audit officers will begin examining all the business records, including physically inspecting stock and equipment for verification. Records from years beyond the assessment time limit won't be reviewed, and in some cases, records other than business records may need examination, especially for sole proprietorships and partnerships. The audit officer will assess records at the taxpayer's business and making copies if necessary. If the taxpayer's location isn't suitable, they may examine records at their office with the taxpayer's consent, and they will provide a list of what they take, then return it after completion. The taxpayer can check and make a copy if needed. For electronic records, taxpayers should provide hard copies or allow electronic copying during the audit. The fifth step is the audit time frame, which takes 1 to 3 days for an on-site examination of records. However, the field audit time frame can be extended based on business size, transaction complexity, record-keeping format, and taxpayer cooperation. Like before, the audit time frame applies only to field audits. Finally, there's the audit settlement. After completing the audit, the officers prepares a report for approval. In some cases, taxpayers might discuss proposed tax changes at the IRBM's office. The officer and a senior auditor will talk about these adjustments with taxpayers, and they can also visit the IRBM's office without an IRBM call for updates or to provide more information for a quicker resolution. Taxpayers will be informed of the audit findings covering the following areas. If tax adjustments are needed, taxpayers will receive a notice explaining them, and they have 18 days to object and provide evidence. If no objection, it is considered agreed, and a penalty may apply for baseless objections. If no adjustments, taxpayers get a confirming letter. Audit settlement aims for 90 days, but IRBM will update if it takes longer. Once settled, the same audit won't be repeated unless there are new issues or info for the same tax years. That is all from me, and next we'll move to tax audit selection criteria.
Moving on to the next part, we will be discussing about tax audit selection criteria. There are 6 criteria. The first one is location. Companies located in big cities such as Kuala Lumpur, Penang, Malacca, or Johor Bahru would be selected for tax audit relatively higher than other cities. This is because the number of listed companies and economic activities are well established there. The next one is specific industries. Specific industries or specialized industries such as property developer, contractor, medical practitioner, taxi operators, palm oil plantation, telecommunication, and IT are selected for tax audit, as these industries have dynamic development, vulnerable, and have many unresolved and contentious issues. The next one is contentious tax development. The hotly debated contentious tax issues such as transfer pricing, withholding tax, interest restriction, reinvestment allowances, and Section 4A for rental income may be prioritized for tax audit because judgmental interpretations are involved between taxpayers, Inland Revenue Board, and the courts. The next criteria is third-party information. Inland Revenue Board, or IRB, would embark on tax audit on another taxpayer if there is a reasonable suspicion that such a taxpayer may have underreporting business income or rental income upon examination on revenue expenses as claimed by the other corresponding taxpayer. The next criteria is risk analysis. IRB compiles statistics on industries' average on turnover and gross profit of all industries with the help of information technologies. Risk analysis would then be carried out to select companies that have wide discrepancies with these averages. The last criteria is taxpayer's previous record of return. Taxpayer who has the habit of late submission of return or non-submission of return would have a higher risk of being selected for tax audit.
Now, I will continue the presentation with the explanation about rights and responsibilities of audit officer, taxpayer, and tax agent. Firstly, audit officer must be professional, well-mannered, trustworthy, honest, and integrity. Audit officer also must give explanation about right and responsibilities to taxpayer and must knowledgeable and fair in administering tax law. Next, the thing that audit officer must avoid to do is having personal financial interest in the business of taxpayer being audited. Furthermore, audit officer cannot abusing his position and duty according with ITA section 118. Moving to right and responsibility of taxpayer. Taxpayer must be cooperate in providing complete responses of all queries. Next, taxpayer also must well-mannered, fair, honest and have integrity. Lastly, taxpayer also must provide reasonable facility and assistance to audit officer to complete their duties. Next, the thing that taxpayer must avoid to do is giving audit officer any kind of money and gift. They also cannot make any transaction during the audit process. Lastly, they must not preventing and stopping audit officer to carry out his duty. And lastly, the right and responsibility to tax agent. Tax agent must avoid giving information for their personal gain. Tax agent also must be professional, honest and complete with knowledge of tax laws and procedures. And tax agent must be trustful, reliable, open and cooperative in all interaction with taxpayer and IRPM. And the thing that the tax agent cannot do is giving a gift to audit officer, providing incorrect tax advice and working with taxpayer to evade paying the correct amount of tax. And lastly, they are delaying the work of tax audit. After right and responsibility of audit officer, taxpayer and tax agent, now I will continue with explanation of new topic, which is assessment and penalties. There are three types of assessment and penalties, such as understatement of debt, keeping of record, and provision of reasonable facility and assistance. Firstly, we look at the understatement of debt. If is discovered after the commencement and audit that there are understatement or omission of income, penalty will be imposed under subsection 113, subsection 2 or paragraph 44B, subsection 6, which is penalty rate will be equal to amount of debt under charge, but DJIR can lower the penalty for 45% if it is the first offence. Secondly, keeping of record. Under section 82, subsection 1, subsection A, every taxpayer must keep safe the record at least for 7 years from the end of the year. Failure to follow the requirement will be penalty a fine 300 to 10,000 ringgit or imprisonment for 1 year or both will be charged to the taxpayer. Lastly, provision of reasonable facility and assistance. Section 80 and 18, subsection 1A state that the taxpayer must provide reasonable facility and assistance to IRPM when they are carrying out the file audit in premises taxpayer. Failure to follow the rule will be a fine 1,000 to 10,000 ringgit or imprisonment for 1 year or both penalty will be charged. That's all from me for topic right and responsibility and assessment and penalty. Thank you.
And the last subtopic is payment procedures. First, if there are any tax and penalties from the audit adjustment, payments shall be made through the designated agent or IRBM payment counter. Second is, the taxpayer is required to make full payment of the tax imposed and the penalties arising from the audit adjustment. Third, the IRBM may consider the taxpayer's application for payment of additional tax and penalties through installments for a specified period. Fourth, application for installment scheme must be submitted to the relevant IRBM branch director for approval. And the last one is, if the taxpayers fail to make the payment within a period allowed or the agreed installment period, a tax increase will be imposed on the unpaid tax balances. That is all of our presentation today. We apologize for every mistake during the presentation. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.